It is August, which means that it is back to school for folks down here in Florida. Orange County Public Schools starts August the 10th is when the kids are due back in. Hard to believe it is that time of year already. Want to take a minute and mention that we are doing a back-to-school supply drive at the office. I don't think I've really mentioned that much. We've certainly shared that with our clients over the course of the past couple of months, but I don't think I've shared it with our listing audience here on the program. So want to make sure that we invite them as well to participate in a back-to-school drive that we are doing in connection with a gift for teaching and tools for Seminole School. So if you'd like to donate, just stop by the office during our normal business hours, 9 to 5, Monday through Friday, and we will be happy to receive your donation for that. Of course, August also means that it's 2 months left in baseball season. So we're going to take a moment and talk a little bit about sports, because we know that our friends over on 96.9 The Game, which is one of the networks that our show comes to you on, well, that's a sports channel. So we always try and every now and then throw in a little sports analogy here. And so we're going to talk a little bit about baseball, because in the dog days of summer, teams are starting to jockey for position for the playoffs with baseball. And I guess there's a lot more teams that make the playoffs in baseball now because they've expanded it. But when you're looking at the statistics, it may surprise you that the Baltimore Orioles, of all teams, are actually leading the AL East, which many people often describe as the hardest division in baseball because it's got the Yankees and the Red Sox. And don't forget the Rays. They've been on a pretty good run of late over the past few years. Well, the story on the Baltimore Orioles is that they have surprised many people in terms of how well they are doing this season, right? So at the start of the week, they were in first place in the AL East division. Consider this, between 2018 and 2021, so those 4 seasons, 3 of those 4 seasons, they lost over 100 games, which when you lose over 100 games as a Major League Baseball team, that means you're kind of not very good. But lo and behold, what has surprised everybody is that they are or were in first place as of the beginning of this week. So sort of at the end of July, first place in the AL East. And I guess that certainly underscores the unpredictability of sports. It also underscores the unpredictability of the markets, right? Entering this year, certainly the Baltimore Orioles were not picked to win the AL East. Certainly, if you think about the market predictions and the economic predictions, what was predicted to occur was that a recession was coming. Supposed to be there, supposed to occur during the year 2023, but instead the markets have actually kind of done the opposite of what you might expect. Now, here's the caveat. I think it's way too early to call an all clear as to recession probability over the next 12 months, but certainly it is nice to see patience and consistency being rewarded for long-term investors. Because when you think about where the markets are, just in July, the Dow did a streak of 13 straight days where it was up. So 13 days in a row, the Dow actually had positive movement. That is the longest such period of time in over 35 years. So it's been a while since we've seen that kind of a strength in some of the market indexes like the Dow. Through July, the S&P 500 was up about 19% compared to down 19% for last year. So if at the end of last year you said, I've lost 19%, I'm out, I'm dumping my large company investment allocation, and I'm just, going to go to cash or sit on the sidelines or whatever the case may be. Well, yeah, as is always the case, markets are highly unpredictable, just like sports. And so lo and behold, markets up 19% through July. So it sort of speaks to that unpredictability, right? It also speaks to a changing market. And we're going to talk about those changes in this part of the program. So welcome on into Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. We're one of Central Florida's longest running radio programs, coming to you on a host of stations throughout the Central Florida region. Also happen to be one of the top 25 financial planning podcasts on the World Wide Web. So make sure you check us out on your favorite podcast channel of choice. When you get there, make sure you subscribe so you know when we upload new content. Any problems finding us on any of those channels? Well, go to our website, nelsonfinancialplanning.com. Upper right-hand corner, you'll see a bunch of icons, although I think one of the icons still has a bird, and we need to change that over to, I guess it's an X now for Twitter. Anyway, you get the idea. Go there, whichever icon looks most familiar, click on it. You'll get immediately directed to our channel on that particular platform. We, of course, also have a YouTube channel where you get to see me in all of my glory. You can be the judge of that. Coming to you from our fabulous Nelson Financial Planning Studios that are on site at the office. Whenever you come by the office, make sure you ask Carolyn or Jamie for a little tour of the studio so you can kind of see where the show comes from. Anyway, one of the biggest things that we've talked about is the market potentially going from sort of this narrow to broadening in terms of the types of companies that are causing the market to go up. We've certainly talked about the market being quite narrow in that it was driven by a lot of tech companies, and a lot of that is attributable to the cost of capital being very cheap, and so that does well for technology companies that have big capital expenditures or big capital requirements. So the question that we want to ask is are you still sort of stuck in that narrow allocation that's focused more on technology? Then you may want to be careful about that, because it's going to potentially cost you money. Because the current weighting on technology is much more dramatic than people realize. If you think about the Russell 1000 index, right? 43% of that, nearly half, is technology companies. You see where the market over the course of the past few years have really evolved to be quite narrow, to be quite focused on technology. Almost like if you didn't own technology, you didn't make as much money as you could have. And so as we think about capital costs increasing, one of the things that we see is that dividend-paying companies wind up ultimately generating a lot of the return when you go through periods where you have higher interest rates and higher inflation. So to get some perspective, we're going to go back to the 70s. So put your bell bottoms on, turn on your American Bandstand, maybe even watch one of those original Star Wars movies. In the 70s, I was a kid growing up in Maine, where, junk mail would actually come to your mailbox and not to your computer. What was happening in the markets was quite interesting, right? Because if you go back to the 70s, you find a higher inflation. So where was the return coming from during that decade? Well, the largest part of that return for that particular decade was, in fact, dividends. Now, dividends have always been a part of your overall investment return. If you look back over the past 100 years, dividends account for about 38% of the return over that period of time. So still make up quite a bit of it, a little bit over a third of the return that you'll get as an investor. But in the 1970s, it was 72%. Almost 3/4 of your return came from dividends. In contrast, over the course of the past decade, only about 16% of your return actually came from dividends. It came more from appreciation and things like that. So we want to stay on this dividend story, particularly because we want to make sure to draw the distinction, and this is kind of the key concept, between owning a value company, which a lot of people think are dividend-paying companies, and actually owning a company that is paying a dividend. There is a big difference to that, and we're going to talk a lot more about that on the next segment here on Dollars and Cents with Joel Garris of Nelson Financial Planning.